Good day, guys. Hope you're good. Today, I'll be sharing with you AUDCAD, which is the Australian dollar against the Canadian dollar. We are currently on the 1 hour time frame. Now, let's get into it. I'll just start here and keep this video as short as possible, but the content I'll be sharing here will be quite insightful and informative. Now, let's get into it. As you can see here, we have a sweep, a liquidity sweep, then price started to drop. It dropped in a corrective manner, spiked up to make this divergence here and dropped, created a significant area here, which is our order block. And price continued to impulsively decline. It declined all the way down to this lower low, which is at 0.854. Now, from this lower low, we acknowledged price hiking all the way up to the order block as indicated here. It mitigated the order block and dropped. This area here gives us the idea that we are, or we should expect cells. As you can see, this is a kind of distribution area. This is our distribution area. So from a distribution area, we should expect cells, but then we are not taking cells from this current time frame. We should go to a lower time frame for confirmation in order to take trades with proper risk and a reasonable stop loss, because we are not trying to blow accounts here. Now, with all that being said, let's go to the 15-minute time frame, which is our lower time frame for this particular trade we are looking at. Now to the 15-minute time frame. As you can see, we have this stunning structure characterized by a break of structure, second break of structure, and the third break of structure. After breaking this structure, price created a high, slightly dropped, and pushed to the upside to make relative equal highs, dropped below this minus swing low, but I was not that interested in this swing low because it doesn't look quite clear. But then the second swing low looks quite clear, and price did come to this area well after mitigated this internal supply here. So price made a nice sweep here. Orders were swept, and after making the sweep, price started to push to the upside. Now we have yet another distribution phase here because price is consolidating. From here, we are expecting price to drop to this area here. It is indicated as 15-minute equal lows. So we should expect a relative equal lows here before shooting all the way up to the supply zone. So we are waiting for that final tick to tick all the boxes and make this trade a high probability trade. So I'll be more than happy to have price drop here and print equal lows to give us a swift ride to the upside. But then again, this structure is still valid should it not drop to the equal loss area. It's still valid because we have a broken structure and a change of character. So this is a shift in market structure. Now, this supply is pretty much valid because we have imbalance here. So should it not drop, then it can still push to the upside. It can still push to the upside from here. Let me do this. It can still push to the upside. Should it not drop to give us equal lows, it can still push to the upside in order to mitigate this supply zone and activate sellers so that we can sell all the way down to this point, which is at 0.86341. And we have a 1:7 risk reward ratio, which means we are only risking 10 pips in order to accumulate 70 pips. In other words, we are only risking 0.05% of the account. Any account you currently have, you should only risk 0.05%, which is half of 1%. That's actually good risk management. Hope you enjoyed this video, and it is a high probability setup. Make sure not to miss it. Thanks. Hope you enjoyed and you find this video informative. Thank you again for watching. Peace.